Welcome to the Roy Morgan Weekly Update. This week's Roy Morgan poll shows a small swing back to the coalition in the lead up to the federal budget, but the Albanese government retains an election-winning lead. If a federal election were held now, the ALP would be returned to government with an increased majority of 53%. That's down 1.5% from a week ago, just ahead of the LNP coalition on 47% on a two-party preferred basis, according to the latest Roy Morgan survey. Now, this is a crucial week for the government, with Treasurer Jim Chalmers delivering the federal budget tonight, the opposition's budget response to be delivered on Thursday, and likely soon after that, the federal election will finally officially be called. Analysis of the primary vote shows both major parties growing their support this week as we get closer to the federal election, due by mid-May. Primary support for the coalition increased 1.5% to 35.5%, and primary support for the ALP was also up 1% to 33.5%. That's the highest since March 2024. Support for the Greens dropped 1% to 12.5%, One Nation was down 1% to 4%, and other parties were unchanged at 4.5%. Independents were down 0.5% to 10%. Now, government confidence, whether people think the country's going in the right direction or the wrong direction, weakened this week, down 4.5 points to 80. So this indicator remains well below the neutral level of 100 because more Australians say the country's going in the wrong direction, 52.5%, than the right direction. 32.5% of Australians say that. Consumer confidence, the ANZ Roy Morgan consumer confidence was virtually unchanged at 84.2 and still in negative territory, below 100. Analysis by state shows consumer confidence unchanged in New South Wales and Victoria, but rebounding in Queensland after the worst effects of Cyclone Alfred have now passed, and consumer confidence is down a little in the other states. Looking longer term, consumer confidence has not been above 90 since late May 2022, the first week of the Albanese government, and it's averaged only 81.6 since the last federal election, but it's been over 85 on average this year. So consumer confidence has been at its lowest this year over the last 2 weeks, under 85, ahead of a big week for the economy, including the federal budget, the likely calling of an election, and a Reserve Bank interest rate meeting next week. Inflation expectations increased another 0.1% to 4.9% this week and are now back at the level they were prior to the Reserve Bank's interest rate cut in mid-February. Australians now expect inflation of 4.9% over each of the next 2 years. And now to mortgage stress, an indicator that's closely tied to the Reserve Bank's interest rate decisions. The latest Roy Morgan estimates show mortgage stress decreasing in February following the Reserve Bank's decision to cut interest rates for the first time since November 2020. So in February, an estimated 1.55 million Australians, or 27.7% of Australians with a mortgage, were at risk of mortgage stress. That's down 1.2% from January. And this decline puts an end to the 3 months of increasing mortgage stress since October, and was no doubt a factor for the Reserve Bank in its decision to cut interest rates in February to provide relief to Australian mortgage holders. The interest rate cut in mid-February has provided hope to many mortgage holders that there'll be further cuts to come in the months ahead, perhaps even as soon as next week. And although the Reserve Bank's outlined a cautious strategy going forward, the recent declines in consumer confidence and increasing levels of unemployment, now at 4-year highs, are adding pressure for further interest rate cuts. If the Reserve Bank follows up its first cut with additional rate cuts at the bank's meetings in April and May, that would significantly reduce mortgage stress. The Roy Morgan estimates show 2 interest rate cuts of 0.25% in both April and May would reduce interest rates to 3.6%, and this would reduce the level of mortgage stress to 25.3% of all mortgage holders, or 1.411 million people. 138,000 fewer people would be in mortgage stress. That'd be the lowest level of mortgage stress for nearly 2 years since April 2023. However, an interest rate cut in an election period would be an interesting decision for the Reserve Bank to make. In the past, the ANZ Roy Morgan Consumer Confidence Index has responded quickly and positively to interest rate cuts, with sustained increases in the index following previous interest rate cuts over the last 50 years. Any decision to lower interest rates in the next month is likely to provide a significant boost to consumer confidence and provide the Albanese government with the opportunity to point to their cut as proof of their economic management. We'll watch closely both consumer confidence and voting intention over the next few weeks to gauge the impact of decisions as we head towards the federal election. Thanks for your interest this week in Roy Morgan's latest results. I'll be back next week to bring you the latest results for consumer confidence, inflation expectations, and voting intentions. Thanks for listening.